what is this that we're looking at? Well, it's a stock chart for Amazon, otherwise known as a candle chart. These are useful tools and indispensable for the purposes of trading. And although my aim isn't to provide rudimentary education on charts in a basic sense, just orienting any of those who care to watch, what we're looking at here is the history of price action for Amazon. So let's take a look at this, right? This is Amazon. We have the time of the day on the bottom left, starting with 9:30, 10 a.m., 10:30, right? And then you have the stock price on the right. So the highest on the screen is 229. The lowest there is 228. So what you're seeing here is essentially the going price for Amazon during those times. And price goes up and down. The demand for Amazon stock fluctuates for a number of factors, for a number of reasons. It could be how people are feeling about Amazon. In fact, that's the ultimate determining factor. And people can feel a certain way about a stock, either positive or negative, for concrete reasons or for more abstract reasons. So let's look at this right here. If you follow my mouse, okay, so right here, August 29th, so that's today. This is 10:38 in the morning. So there was a sell-off. So when you see red candles, so each of these candles represents 1 minute of time. And if you see that the candle or the bar is red, that means that there was more selling pressure than buying pressure during that duration. Thereby it pushed the price down. And the larger the candle, the longer it is, the more forceful the selling pressure was during that time. So what you're seeing from here to here is some pretty relatively aggressive selling pressure. Nothing happened here. Actually, if you want to know the truth, this is just a period where the broader market was just declining. So today the market opened up a little bit positive, and it ended up being like, I think the Nasdaq was like 1.3 or 4% in the red. That's kind of when that started. But anyway, suffice it to say, a trader is constantly interpreting um, these charts. Now, real time, they're moving, they're going up and down, and no one knows the future. But the name of the game is to be able to buy, and I can even I can right click here. Now, this happened in the past, but let's say I'll go to the current moment of the day for Amazon, which is right here. Now, the reason why the bars are minuscule is because, well, the stock market's closed. Now, Amazon still trades after hours, but the amount of people buying and selling it are far less, so you get almost no data. But the name of the game is to be able to buy at a low. Let's say I want to buy 3 shares of Amazon. The idea is to buy it at a relative low, hoping that it will rise above that point. And that's how you can sell for a profit. Now, in order to do that successfully, you have to be able to have some sort of thesis or argument for why you believe price should go back up. And if you look at this, you see some general patterns, right? I mean, price action generally, stocks go up and they go down. They go up and they go down. They go up and they go down a bit more. And then they go up a little bit less and they go down a bit more. So there's an ebb and a flow to price. And sometimes the ebbs and flows are quite predictable. Sometimes they're quite narrow. Sometimes they're explosive. Sometimes the way price ebbs and flows up and down is what I will call orderly. It's somewhat more easy to predict, and sometimes not so much. Sometimes price is erratic, and it's hard to find a pattern. Looking at this, Imagine over 10-15 minutes, price continues to move down. It is very hard when you have what we call directional movement, like prices moving down towards a new level, a new low, whatever it is. It's very difficult to time it and buy it, and then to sell it up. It's very difficult to do. So as a trader, you're looking to determine what is suitable, what makes sense to you. And honestly, if I saw this, I wouldn't trade this. For me, I don't like this setup. Now, let's look at a few more stocks and see what we can find. And I've got four on the screen here. And let me see if I can find one. Today was, there weren't many opportunities at all for good trading. The volume was just far too low. But here's actually a good example of a setup that I do like. So this is the stock Roblox. Now Roblox, if you don't know, this is one of the most popular gaming, I don't know if you call it platforms for young people. It pulls in a ton of money. They have a little bit of controversy, but they're quite good. They bring in a lot of money, and their stock is very good too. So Amazon was very tightly bundled with the ups and downs. Here we have, and this chart's looking out, so this is like a day and a half old. But we have big moves. A big move up, a massive move up right here, and then a pretty big sell-off. Now, if I zoom out to 3 months, and I get the broader context for this, well, I could see that this stock moves very aggressively. It makes big dips and sells, and the movements are quite large. And even when you look at it, it's somewhat predictable and orderly. So a big move, and then a big move, and then a big move down, and a big move up, and a big move down, and a big move up, and a big move down. Everyone has their own style, but when I see this, I see really big extremes. We call that like high beta. High beta is just like, a lot of variability in price action in the stock. This is the kind of setup that I like. Because if I look at this setup, okay, and if I just analyze this for a second, now this is just looking at the graph visually. Ups and downs, ups and downs, ups and downs, ups and downs. So what I can say in confidence is that every down phase is followed by an up phase. Now, I don't know exactly how high it's going to be. It could be massive, it could be small, but I do know that after selling pressure, there is some buying pressure, and these moves tend to be pretty big. So because the moves tend to be large, it's easier to predict in confidence that there will be, so if I were to buy here, let's say I were to buy 12 shares right there. Now, it's not going to go through right now, but let's say, because this is where price is currently at, but let's just pretend like none of this stuff is here and price is right here. If I were to buy here, and I look at the setup of it, well, it's reasonable to suggest that there might be some upside, that there might be a chance of this stock rising up in this direction. In fact, I know it will. It's just a question of when. Now, with that said, this is a prediction. And even with, being able to observe patterns, you can have a very well thought out thesis for why you believe the stock should go up, but that doesn't guarantee anything. So the question is, if I have $10,000 I can put down and it would trade, how much money, how many shares of Roblox should I buy here? So if I bought 24 shares, that's $2,900, right? Should I buy that much? Well, I said I had 10 grand, so why not buy 70 shares for 8,600? Why not go all in? Why not bet all the money that I have in my possession on this position? It's because I could be wrong. and I often will be. These are projections on what might happen, not what will happen. And that's the other component of this, is that just because you have this idea that you have a good setup, you've identified that it's more probable that here the stock's going to bounce and go up. That doesn't mean that it's going to. So this is where, and I alluded to this in my previous video, this is where risk management comes in. Well, so if I were to buy like 12 shares of this right now for like $1,400, if I put that down, it executes. Let's say, unbeknownst to me, some bad news about the company comes out. And this happens actually far more than you might think if you're not in this field. This stock all of a sudden totally disrupts its pattern and sells off dramatically. Boom, like 30%. And now it's down here. And I put 1,300 here, and now I'm like $700 in the hole, $600 in the hole. Well, that's far less painful than if I put 10,000 up here. So the question is, and every investor or trader has to figure this out for themselves, is what are you comfortable with? What are you comfortable putting as a base case, to initiate your trade? Because you know what I can do? So I like to, let's say I'm entering a position in Roblox for the first time as a trader, right? And I have $10,000 that I can use. And I buy 12 shares here. $1,400. Well, let's say the price drops, which it often will do. Well, now I have the option to do what's called cost averaging. So if the price drops, I can buy 12 more shares down here, and that's actually going to bring the average price of Roblox down 50% to be right here. So that's something called cost averaging, which I have a chart here, to kind of show that. So if you can imagine on this graphic here, every single black dot that you see is a time in which I purchased some of this stock. And the average cost runs directly in the middle of all these. So I've got some purchases that are below the average and some that are above. What matters is, well, the average cost of your shares. So if I buy up here and I buy down here, the average cost is going to be, assuming I did 50% here and 50% up here, is going to be right in the middle, right? So when it comes to trading stocks, you can utilize cost averaging, but only if you take a small position to begin with. So if I put 10 grand up here and then this stock drops, well, unless I want to put like $10,000 down here and then making it a $20,000 position, that's a lot of exposure. Unless I want to do that, I played my hand already. There's nothing else I can do other than selling it for a loss or just waiting and hoping to God it recovers. So this is a very verbose and cerebral kind of an episode, but these are the things, so if anyone's actually interested in being a trader or getting into this, these are the types of thought exercises that you must go through. And I would argue that if this doesn't interest you, then you probably shouldn't be in the business of even trying to trade, because you should be fascinated and intrigued by these topics, because you have to be spending a lot of your time thinking about this. And if you don't find it intrinsically interesting, you're never going to make it. If you're only thinking about making money, or if you have this fantasy that this is easy, you're deluded and you're out of your depth. This is a science and an art, and it is a thinking man's game. And I don't think that you have to be a superhero to do it, but you do need to think deeply. You have to be a smart person, but beyond that, so you have to you have to be a thinker. You have to be smart, but you also have to have the right attitude, the right temperament, the right attitude towards risk, and you have to be able to make wise decisions under pressure. And the set of characteristics that constitute that, of personal characteristics, are many. Which is why it's not really so easy to teach someone how to trade. It's more of teaching someone how to think in a certain way, which may or may not be beneficial to what this is. Because fundamentally, this is simple. We're buying things low and selling them high. But I'm telling you, in practice, it's very complicated. There's many variables, and many of them can't be quantified. So, food for thought.